So, you should always take history with some, I'm not exactly sure how many pinches of salt, but it is a good way to start thinking about it. I mean, in a sentence, my view is I do think that history will repeat, but there's very good reasons for history to repeat in terms of the rally, rather than it just being a repeat of history.
So here's something that stood out to us. You say we see Democrats gaining the House as leading to a stronger and longer rally in equities. Not sure this is a consensus view.
No, it isn't, but it definitely, that's our base case. Our base case is, in line with the consensus as far as the political outcome is concerned, which is that the Democrats gain the House. That would be pretty typical for a midterm election. It's happened, quarter of the time. And the Republicans, in the Senate, keeping or even increasing their majority. And that, I would argue, is really for idiosyncratic reasons. In terms of what impacts and implications this has for the equity markets, the 2 points I think are important to make. The first point, I think, is getting a little bit lost, which is that it has become, as you said, a very, very close election. I mean, turnout is at, I don't know, I heard somebody say, I don't have the statistics myself, that it's since the highest since 1914, just prior to World War I, which explains why it was that high. And the thing that one needs to remember about close elections is that the equity market is like any other market, tends to build up a risk premium around uncertainty. There may be a consensus view, but if you ask anybody, what is the probability that the Democrats are going to get the House? I mean, it's not really very far from 50%. And so I would argue the uncertainty band's pretty high. And so the first and very simple point that I would make is, there's very likely a pretty reasonable risk premium in the equity market today, just a close election risk premium. And so as long as we get a clear result that is not contested by either party, you should get a rally.
You mean
it's just, I mean, it's exactly what happened after the presidential election. If you think back 2 years ago, the predictions were all for, if one party wins, the market's going to go up. If the other, it's going to go down by 10%. And the market rallied. It gave up the
So you're saying the market wants to see it work, the whole process work.
Exactly, exactly. So number one is just simply, a risk premium coming out of the markets. And that we would estimate, historically, as being 1.5 to 2.5%, as long as the result is pretty clear. And then, Sarah, the issues that you were mentioning, in terms of the particular configuration, that will matter. It will matter out to year end.